Hi, Ron Benning here. In this video, I'll be giving a Sacramento Fourplex market update for the time period ending September of 2024. In this video, we'll also look at key local market trends. I will also touch briefly on the interest rate trends. And I'm going to be telling you what is the target GRM that you need to look for to break even. Before we dig into this month's numbers, I want to point out to all investors that you really need to be voting no on Proposition 33 this November. If it passes, there are going to be several important rent control aspects that will be increased with a very negative effect on real estate investors. I have a link down below to a video that I recently did if you want more details. Developing trends leave evidence. If you want to know what's likely to happen in the next month or two, watch the video until the end. September 2024 was a strong buyer's market for the fourplex market in Sacramento. We currently have an 11-month supply of fourplexes on the market, and we've seen a steadily growing inventory trend over the last 8 months. At the same time, despite lower interest rates, the pending sales and closed sales are still flat. With an 11-month supply, the market is entering a more entrenched buyer's market, with buyers having significantly more bargaining power and having more inventory to pick from than any time in recent memory. Although there are always seasonal fluctuations in listings, there are 153% more listings on the market than last year at this time, with static, pending, and sold numbers. Last October, interest rates peaked at around 8%. Right now, the interest rates are down to about 6.75%. Notice that the rates on the Freddie Mac rate chart on the screen are the base rates, so the multifamily loan rates will always be about 0.5% higher than the base rate. So with rates going down so much, why is the inventory still growing? It's really pretty simple. Most of the properties on the market just don't pencil out. And the buyers have been either not buying or buying in other market segments, or in some cases, just other areas. For the past few months, most of the fourplexes that sold had GRMs below 11, while most of the properties on the market have GRMs above 11. This is why the average days on the market for closed sales is going down, despite a growing inventory. Pure and simply, if fourplexes are priced right, they're moving faster than ever. Otherwise, they just don't sell. The sold price compared to the asking price has fallen to 92% of the original asking price at this point. This represents some of the softest pricing in recent memory. Despite this, it's still really important to understand that properly priced properties are not being purchased below the asking price. We can determine this by seeing if the GRM is below 11 or not. Trophy properties in East Sac or Midtown are the exception to this rule of thumb on that GRM. Because of the small amount of sold properties, the average sale price is really not very meaningful right now. But assuming a 6.75% interest rate, the break even on the average price fourplex with no maintenance or vacancy factored in is around 11.5 on the GRM. This type of calculation is good to have and use as a relative measurement of what you would need to target to break even in a perfect month. A more precise estimate and calculation with full APR can be done later once we find the specific property. This means, on average, that any property with a GRM above 11.5 will not provide a break-even cash flow with 25% down. Over time, as interest rates go up or down, small adjustments can be made to the target GRM. To better understand how these GRM numbers work and will be changing, watch my upcoming video, How to Analyze Any Investment Property in 30 Seconds. In this video, I will go over this concept in a lot more detail. This is the whole reason I've been doing these GRM reports for years. Once you know how to use them properly, finding the right properties becomes very easy. By looking at my weekly GRM reports, you can easily see which properties are priced right. And to see those that are not priced right, you can use that same report to target them for writing lower priced offers in line with what they should be. This calculation also explains why the properties below an 11 are selling quickly and other properties are just sitting. If you're enjoying this analysis and you're not already subscribed to this channel, please subscribe now so that I can continue to keep you in the loop about everything happening in the Sacramento investor market over the next few months. So what does all this mean to you? I suspect that inventory for fourplexes is going to continue to grow over the next month or two because most of the current inventory just doesn't pencil out and probably will not sell. I suspect we will be seeing falling prices in the fourplex market over the next few months as a result of this. And as more motivated sellers either list lower upfront or start to lower their asking prices to attract the finite number of buyers. I think many sellers and listing agents don't yet realize that we're already in a strong buyer's market. So it may take a few months for the street to figure out what you can clearly see in my analysis here. Unless we see a significant decrease in the interest rates or inventory, I believe prices will have no choice but to go down. For potential sellers, the past decade has been one of the longest periods of continued appreciation in prices for the last 30 or 40 years. But all market cycles end at some point. It's an inevitable part of the supply and demand struggle. If you've been holding on, waiting for the peak, it may have arrived or possibly even already passed. Now would be a good time to consider taking profits or moving into other asset classes that are less hands-on. I would be happy to discuss some of these alternatives, including some out-of-state opportunities or some more hands-off investment classes. The lack of properties on the market that will break even combined with a growing inventory has also been an important predictor in past market cycles of when there is a need for a market correction. This buyer's market trend has been going on for several months now. In the next month or two, we will see if lower interest rates can help to eliminate this building inventory. If you're considering selling, look down below the description for a link to request an analysis of the value of your property or what the current rent should be. For buyers, I would be targeting the fourplexes that are closest to that target GRM of 11 for that break even. And for those that have been on the market for more than 30 days above that break even, we can be writing offers that are closer to that sweet spot. Despite all this, there's still been no fourplex sales that I've seen in the MLS with a GRM below 10 in the past few months. So that target range is fairly narrow, probably between 10 and 11 times on the GRM. If you're a buyer and you're not already receiving my GRM reports and MLS feed, look down below in the description for a link to get started. Feel free to use the comment section below to ask me any questions or let me know any topics you'd like me to make a video on. Whether you're thinking of buying or selling in the next 7 days or 7 months, feel free to give me a call, text me, send me an email, or we can set up a Zoom meeting so I can answer your questions and I will help you to plan a smooth purchase or sale transaction.